with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. As the year 2024 winds down, we will discuss some of the biggest economic headlines for China and around the world. This year, China introduced a series of economic stimulus policies targeting the housing market, local government debt, and consumer spending. At the recent Central Economic Work Conference, Chinese leaders charted economic plans for the year 2025. China will pursue a more proactive fiscal policy with a higher deficit-to-GDP ratio. It will also pursue a moderately loose monetary policy. The IMF said China remains the leading contributor to global economic growth. And for the United States, the Federal Reserve cut the interest rates by a quarter point in December. It also announced that it expects 2 rate cuts in 2025. For Europe, the European Central Bank cut the interest rates 4 times this year. The economy grew by 0.4% in the eurozone in the third quarter. So what has been happening in China and the world economy in 2024? And what are we looking forward to in 2025? For more on this, joined us on the line now are Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, Chen Jiahe, Chief Investment Officer at Novium Archi Technologies, and also Yan Liang, Professor of Economics, Willamette University. So, I will start with you. So, what do you think are the big things or things of significance happened this year for China and the world economy?
Right. So I think for the world, there are 4 really major trends that we observed this year. One is that the growth has been relatively slow, but also there is the disinflationary process going on. So some of the major countries are able to achieve the so-called soft landing, which means they are able to avoid a recession while they're bringing down the inflation. The IMF project the global growth rate this year would be 3.2%, which is lower than the pre-pandemic average. And also the global inflation is going to be brought down to 5.8% this year. So it is still relatively high, but it's much more moderated from a year ago. But we're also seeing, growth divergence. For example, in the European economies, Germany is projected to grow at 0% by the IMF. Whereas the United States is growing at 2.8% and China's close to 5%. So we're seeing the kinds of growth divergence and lower income countries, developing countries are still struggling with some of the debt burden. So that's the first trend. The second trend we're seeing is this is really a year of elections. 65 countries have, presidential election this year. And of course, the United States election is the most consequential one. And we can talk about, the implications thereof. But related to that, I think we're seeing also rising geopolitical tensions, when it comes to the Russian-Ukraine war that is still going on, and then the tensions in the Middle East. And we're now seeing also the United States with Donald Trump elected. It would probably also heighten, geopolitical tensions among not only the U.S. and China, but also with other countries as well. But we're also seeing the global South is gaining more power in terms of, their economic power and their voice and their influences. So, for example, the expansion of the BRICS countries, but also the G20 summit hosted by Brazil, which has rolled out a very pro-development agenda. And last but not the least, related to the geopolitical tension, we're seeing also trade fragmentation, protectionism is on the rise, and also uncertainty has been elevated. So I think those are 4 major events and issues as far as, the economy, the global economy is concerned in 2024.
So, Dr. Zhou Mi, so let's talk about China. Chinese leaders are expressing confidence that the country will meet its social and economic development targets for this year. So how would you sum up China's economic performance over the past year?
Yeah, we know that from the first quarter of this year, we see a very strong growth for the GDP, and also it's a very important start. I think that in the following several quarters, we see a little bit of decline about the speed of the growth. I think that is understandable because we are trying to address the challenges while together to change the structure of the development and trying to put more efforts to support the consumption. So when the world is facing a lot of challenges, especially after we know there are some kind of innovation, especially from the artificial intelligence, I think that China's economy is trying to catching up with the new trend and also trying to be more stable to provide a better environment for the different stakeholders. So when we're talking about the overall performance, I believe that we can perform pretty good compared with all the other economies in the world.
So, Jiahe, so how do you look at China's economic performance over the past year?
Well, when we look at China's economic performance, it's quite incredible that with the pressure that's coming very strongly from the property market, the economic growth is still remaining at around 5%. And this is not only expressed by the economic growth data. If you look at other related data, it shows you the similar sign. For example, the electricity consumed has been increasing by about 6 or 7% because we have been investing in quite many power generating companies, and we add up the annual reports and quarterly reports of these companies, we see a very similar number. So the GDP is still growing at around 5%. So that's quite incredible because if you look at China's economy, the pressure from the property market has been huge because we are trying to debubble what has been going on in the property market. We try to reduce the price. We try to contain the soaring price and speculation in the market. In most cases, this kind of controlling would cause a lot of decreasing with the economic growth. If we look at the global economic history in the past 100 years, and in China, it also deterred the economic growth, but we still got like 5%. And for some sectors like the online consumption still growing at about 10 or 11%. So that's actually quite incredible. It tells you how strong the potential of China's economic growth actually is. We actually believe that if the pressure from the property is more stabilized in the next few years, we might get the economic growth rates to be higher than 5%, maybe reaching 6 or 7%.
So, Yan, so how would you interpret the fiscal policy? I mean, the decision to increase the fiscal deficit ratio and accelerate the fiscal spending in the year 2025.
We're talking about the government issuance of special purpose bonds. So this is sort of the proactive fiscal policy. And part of these bond issuance is going to continue to support consumption directly, to support a so-called two new projects, which basically means there will be continuous trading programs for household appliances, large-scale manufacturing equipment trading, and upgrade programs. There's also 2 major programs which refer to some of the national strategic constructions of railways, airports, farmland, and also build security capacities in key areas. So part of the bond issuance is going to continue to support consumption and investment, which is, the top priority, right, to boost domestic demand. And then part of it will be used to continue to support advanced manufacturing, tech sectors, emerging sectors growth. This is really to cultivate the high quality productive forces to continue to promote innovation-driven and productivity-led economic growth.
And Dr. Zhou Mi, so officials also announced in September the stimulus measures to stabilize the housing market and boosting the consumer spending. So what impact will that have, and where do you see this heading to?
Yeah, as you mentioned, the stimulus package is not just one policy. It is a package of the policies. So it's trying to release some of the very positive and active signals to the market that we will trying to do more to support the market to recover. In the past several years, Chinese government is quite pretty cautious about the policies. We are not using so many policies to trying to encourage the market. Well, we are trying to reduce the cost of doing business. So if you're looking at these new packages, it is trying to see that the government is going to support the market to recover in a much quicker speed. So I think that is really giving more strength to the market to believe that what we can do in the coming months or even years. So this is very important. And also, if you're looking at the policies, they are trying to address the different short part of the development, and also to boost the stock market and the real estate, and trying to give more support to use more room for the development in different areas and spaces. So in my understanding, it is really our important economic event this year, because China is one of the two major economies in the world. What we are doing is not only affect the market here in China, but also will affect the relation with other countries, and some other investors from different countries. They also have more opportunities to come here to benefit from the more sustainable development here in China.
And the government is aiming to boost the domestic demand in the year 2025. So how do you think the fiscal policies will support for this goal?
Yeah, actually, as Yan have mentioned, that the fiscal policy is trying to use what we have got for the experience this year, and trying to encourage the more consumption products be used by the families. In my understanding, it is not only about what we are going to replace the TVs, refrigerators of those families, but we also are trying to improve that, to update them, and trying to input more like the digital economies, more intelligent things to do with those things. And it is also our update about the environment. For the ecosystem, we are able to better fit it for the digital economies in the coming years, and it is able for us to continue to give the abilities for of the enterprises to the consumers by giving their services or trying to giving them better enjoyment about using that. So for the consumption, for the fiscal policies, I would argue that it is very important in the recent years, especially when United States is trying to use the industrial policies to trying to attract the investors. So we are in a very important time to trying to do more to catch up with the digital technology, like the artificial intelligence is one of the very important issue this year, and in the next year it will speed up. So we are going to do more to support this market to be better fit for that.
So the economy facing some challenges, but in the chip sector as well as EV or electric vehicles, China is successful in this past year. So those two sectors grew by 20% and 50% respectively. So how do you see that will play out?
Absolutely. I think what is most remarkable, for China's past year, is this leapfrogging in technological, advancement. This is part of the cultivating, high quality productive forces, and we clearly see, how some of these tech sectors and green space has been really growing and expanding. So the two examples that you mentioned, semiconductor industries, yes, it has been growing by leaps and bounds. And we know that, for example, the U.S. Commerce Department Raimondo has recently lamented that the tech containment in China's the semiconductor industry is fool's errand. So in other words, China's growth and development in the semiconductor chips industries cannot be really contained by the United States' sort of the strategies and policies. So I think that just indirectly showcase how China has been really achieved great progress in the tech space. And as far as EVs are concerned, you're absolutely right. China now is accounting for 67% of the global EV production and sales. So China, again, is accelerating in its own green transition, but also supplying the rest of the world with very affordable and very reliable electric vehicles. Now, that said, I think, the external environment will continue to be challenging. So I think, China will continue to grow in the tech space and continue to produce, these very affordable but also reliable, high quality new products, high tech products. And I think that is really the way, for China to be able to compete with some of these, policy and protectionist sort of maneuvers by these countries. And on the other hand, I think China has been also especially at the enterprises level. They have been trying ways to diversify their supply chain, to build more overseas supplies, and also trying to explore more emerging markets. And I think those are really important going forward. So again, I think China is going to continue to be innovative and also competitive, and also business savvy. So we look forward to, I think, all these technological developments going forward.
And Jiahe, so as Yan mentioned, the uncertainty is rising in the global economy and the geopolitical tensions or rising tariffs are hurting the global trade. So do you think foreign investors will continue coming into China? And what are the key drivers for them?
Well, when we look at the global trade, it has been deterred by geopolitical tensions and the expected policies of the United States. But if we look at the global trading data for China this year, we got a pretty high growth. I mean, because if you look at the port companies in China, the trading volume has increased by about 6 to 7% this year. So China is still dominating the global trade. I mean, China has the world's most completed industrial chain. We're not only trading with the United States, we're trading with almost everyone in the world. I mean, South America, Southeast Asia, Africa, Europe, everywhere. So we are a critically important position in the global trading system and the global manufacturing. It's very hard for a company or a business to say, okay, I'm going to give up the Chinese market to my competitors, and I'm not trying to, grab the opportunities there. I'm not caring about the money making there. It's really not possible for many global companies. So we still see foreign investment coming into China because of this large scale of the economy, the complete of the industrial chain here, and the efficiency of the Chinese factories and businesses. And also Chinese government has been welcoming the foreign investment by a very open attitude in the past year. We have seen so many policies aiming at attracting foreign investment. So it's now China is really welcoming every investment in the world.
And Dr. Zhou Mi, so what specific measures has China implemented this year to enhance the business environment?
Well, as for the business environment, I think that is very understandable that all the government is trying to compete to attract investment from other countries. So in this regard, I think China is one of the most special one because we are very stable. We have provided a long-term of development environment for the companies who are going to stay here for 5 years, 10 years, or even 20 years. So actually, it is very predictable for the investors if they are going to make a plan. They can try to identify what are the opportunities. And the second, I agree, there are such a super large market. So we are trying to connect all the separate markets by the infrastructure development. And we opened our limitation or restriction on all the manufacturing investors from other countries. And it is very necessary for them to try to find more opportunity. And third one, I think that China is also carry on and push the free trade zones in China all around China to do their specific development and openness. So we are not only trying to do something, but from our own idea, we are collecting the ideas and the suggestions from the investors and trying to facilitate the trade and investment, the process. As in the WTO, we also joined the initiative of the trade of the investment facilitation, and it is plurilateral levels of agreements, which is very important for improve or enhance the transparency. And I believe that from this measurement, we have given the market a very clear signal that we continue our promises of opening up our door wider and wider. And that is definitely based on the development of the innovative ways.
And this is China's economy. And yeah, we will also talk about the U.S. Let's start with the, the recent quarter-point interest rate cut by the Federal Reserve. Reports say there will possibly be fewer cuts in the year 2025. So what's your assessment? And what do you think are some of the current structural problems for the U.S. economy?
Right. So I think Powell has suggested that, with the cut this year and next year, the cuts may go down from 4 times to 2 times. But there are also other, Fed watchers believe that 3 times cuts might be more appropriate. That said, I think it really depends because Donald Trump's the policies are very, in a way, uncertain at this point. He has policies such as mass deportation of immigrant workers. And also very large tax cuts. A lot of these will elevate inflation, but could also dampen growth. So it's really the matter of, which of these two are going to outweigh the other side, right? So if the growth is going to be slowed down significantly because of tariffs policies, because his mass deportation of immigrant workers, then the Fed will see more room to cut interest rates to stimulate, job market and growth. On the other hand, if the tax cuts and also, I think, again, the tariffs, if they elevate inflation, then that means the Fed's hands will be more tight in terms of cutting rates. Also, I think, Trump has pledged some kind of meddling with the Feds, saying that the Fed should cut more rates and so on and so forth in a way to reduce the Fed's autonomous policymaking power. And that, in some ways, could, again, pose more uncertainty as far as how many times the Fed is going to cut rates and what would be the level of the rate cuts. When it comes to the structural, I think, deficiencies of the U.S. economy, I think we're seeing two really parallel sort of the trends. One is deindustrialization, right? The United States has been hollowing out its industrial capacity, even though with Biden's administration, they're trying to bring back jobs and they have initiated CHIPS Act, Infrastructure Act, and also Inflation Reduction Acts. A lot of these aim to, re-bolster the U.S.'s manufacturing and industrial capacity. But Trump has pledged to really rescind some of these unspent funds. And so it's very unlikely what will be the fate of these industrial policies. And overall, I think the Biden's administration's industrial policies have more smoke than fire. It talks a lot about bringing jobs, but when you look at the actual achievements to boost industrial sector, it's very mediocre. So that's one of the, I think, the problems with the United States economy. And the related one, of course, is the overall financialization of the economy. So we're seeing the U.S. stock market is booming, and the crypto space has been really, it's rising, right? It's really skyrocketing when you look at Bitcoin and other, cryptocurrencies value. And so I think that is very concerning. The Financial Times has published an article called the Mother of All Bubbles. So this is sort of this idea that we have all these tech-driven investments and also financial speculation, but it's actually hard to pinpoint exactly how those tech has really benefited the economy or not, right? The whole Solow paradox, right? The tech is supposed to be ever present and omnipotent, but yet it doesn't show up really in the economic numbers. So I think, both deindustrialization and over financialization, they're really related. And I think that really are the long-term challenges for the U.S. economy.
So Dr. Zhou Mi, actually the year 2024 may be remembered as the year that generative AI went well beyond writing text. So how would you describe the overarching trend in the tech industry this year? And how did artificial intelligence evolve so quickly in 2024?
Well, as I have discussed that it is a really big impact about the technology development. Artificial intelligence is it has merged into all kinds of businesses. So the companies are really trying to catch up with ideas and improve their abilities. Well, it is still far from our phase of stable. So the companies are trying to understand what is happening. Maybe some coming from themselves, some coming from their competitors. Some come from their companies in the supply chains. So no matter in which kind, I believe that the companies in China are really trying to gain more abilities by using this technology to reduce its cost and improve their competitiveness in the world. Well, it is also true that the United States is one of the origin of the artificial intelligence, especially for this round. But I mean that the market is also very important. So in China, maybe the technology is not that high, but the companies are really very active in doing more. Well, the consumers are very important factors in the development of the technology, and they are trying to have more from the companies. So this year is very important when we're talking about if you're looking at technology history. I mean, that is really giving us some new tools, which is very special, maybe compared with the past several decades. So in the coming years, in the year of 2025, it will also play even more important role in the development of the economy and the patterns of the businesses.
And Jiahe, so how do you look at the tech industry development this year, and what are some of the most groundbreaking applications?
Well, when we look at the tech industry, we have seen quite many breakthroughs. I mean, we don't have any kind of huge breakthrough, for example, with things like quantum computing or controlled nuclear fusion, which these kind of technologies would change the human world forever. We haven't really saw those things yet, but we have some quite many small improvements in the global economy regarding the tech breakthrough. For example, the large amount of application of AI is now really changing many jobs. Although we don't have AI that is working really well. For example, I always try to search something in the AI system. Sometimes it gives you good answers and sometimes it don't. But it's a kind of new things that it's offering us. And we are now having more choices with these new AI technologies. And every technology when it's starting, it's not that perfect. So we're expecting the AI technology will be more improved in the future. Also, we think other things, for example, the auto driving has been developing quite significantly in both the China and US economy. I mean, both countries are trying the auto driving. I mean, statistically speaking, currently auto driving is actually causing less accident in the road compared with human driving. But we can't accept the accidents caused by auto driving at all. So they're still trying to improve, but we can see the silver light in the aspect of auto driving. Also, there has been a huge amount of application for the drones, which has changed really a lot of things for delivery, military actions, and everything.
Well, we're speaking with Chen Jiahe, Chief Investment Officer at Novum Archi Technologies, Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, Yan Liang, Professor of Economics, Willamette University. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.